Hey everyone, I just want to do a quick video as to why I started Sellfy. So we have a competitor of ours, Better Mortgage. They claim to have the lowest rates at the lowest cost. And what we really try to do is we try to empower the consumer to shop and compare online. And so let's just take a look at how we stack up with Better Mortgage. So here you can see $500,000 purchase price, $100,000 down payment, excellent credit score. We'll make it a 30-year fixed mortgage. And you can see that the lowest rate offered today through their website is 4.75 with 1.179 points. And I love that they're able to show you rates up front. We appreciate that transparency. We want to make it as easy as possible for customers to shop and compare online. So if you go to sellfy.com, you can just plug in the same numbers. Now we're a marketplace and we're a discounted mortgage broker, whereas Better Mortgage is a correspondent lender, meaning they're selling the loans after the loan closes to different correspondent lenders like banks or the money stores or other lenders. So you can have here the same scenario, primary residence, 500,000, 400,000 loan amount. We'll never limit the number of times that you can check rates, whereas Better Mortgage will limit your checking of rates to 3 times. So you can see here today's rate. So the lowest rate option would be 4.125 with 1.804% in points. Now that's higher in points. This is closest in points, but that's actually higher too. So why don't we, just to make things fair, let's just say 4.375. So here you're actually getting less points. So you're paying less in closing costs to obtain this rate at 4.375, and you're getting a lower interest rate by 0.375. And so you can see here that the difference in the monthly payment, in addition to the lower closing costs, is going to be 1997 versus Better Mortgage. It's $2,087. And so that equates to $90 a month. And so one of the things that you have to keep in mind is that $90 a month is investable. So there's compound interest. So if you were to now the initial investment is actually going to be a couple thousand here because the closing costs will be less through Sellfy. But let's say if it's zero, and the $90 monthly contribution each month you're investing it. It's a 30-year fix. So let's say you have the mortgage for 30 years, the length of the loan, and the average S&P 500 fund usually returns about 8%. And so if you do that, the difference in what you pay over the life of the loan is $122,000. So for some of you, that means you might be able to retire, 1 year sooner, or maybe this is your ability now to put your kids through college or a down payment for your kids' home. There's a lot you can do with $122,000. And I just think it's a little unfair when we have Better Mortgage, which loses money, so they have a bigger microphone, so they can tell everyone, hey, we actually have the lowest rates. Sellfy, we actually operate on lower margins, so that we're not, but that means we're not able to spend millions of dollars a month in advertising. But you can see that you can get the same interest rate from a reputable lender, in this case, Rocket Mortgage, which guarantees that they can close purchase loans in 15 days or less, which would be 2 times faster than Better Mortgage. And you're going to save money not on the closing costs, but substantially on the interest rate. And then over the life of the loan, if you were to invest that money, it's really going to make a big difference in your life. So this is really why I started Sellfy. I just see an opportunity in the market to help homeowners get a lower rate at a lower cost. If we are not the low rate option and you feel like you're getting a better deal elsewhere, we're a true advocate. We're going to tell you to go with that other mortgage company. And I feel like sometimes lenders who are pounding the table and pounding their chest saying that they're best, they're not going to be that true advocate. They're going to just try to convince you and persuade you to use their services. So just, hey, it's very important to shop around. In this case, it would have saved you, if you were that borrower, $122,000.